Mastering Investing 10 Rules. You need to know. Welcome back to the channel, everyone. Today, we're talking about investing. Something that can seem really intimidating if you're just starting out. But don't worry, we're here to make it simple and approachable for you. But let me tell you, it doesn't have to be. Investing is a skill that anyone can learn with the right guidance and mindset. It's all about understanding the basics and building from there. We're breaking down the 10 golden rules of investing. The kind of stuff that'll save you from making rookie mistakes and put you on the path to building real wealth. These rules are tried and tested, and they come from some of the most successful investors in the world. Whether you're just starting out or you've been in the game for a while, these are the principles that can make all the difference. They are designed to help you navigate the complexities of the financial markets with confidence and clarity. So, grab a notebook, get comfy, and let's dive in. We're going to cover everything from understanding risk and diversification to the importance of staying informed and having a long-term perspective. By the end of this video, you'll have a solid foundation to start or improve your investing journey. Let's get started. You hear it all the time, but seriously, the best time to start investing was yesterday. The second best time? Today. The earlier you begin, the more time your investments have to grow and benefit from the power of compounding. It's not about having a lot of money to start with, it's about starting with what you have and being consistent. Look, I get it. It's easy to think, I need to wait until I have more money, or I need to wait for the market to be less confusing. But waiting can be a costly mistake. The market will always have its ups and downs, and there will never be a perfect time to start. The key is to start now and learn as you go. But here's the thing. Time is your biggest asset when it comes to investing. The longer your money is invested, the more opportunity it has to grow. Even small amounts can grow significantly over time, thanks to compound interest. Think of it as planting a tree. The sooner you plant it, the sooner it can start growing and providing shade. The sooner you get started, the sooner your money starts working for you. Every day you delay is a missed opportunity for growth. It's not about timing the market perfectly, it's about time in the market. Consistent, regular investments, no matter how small, can lead to substantial growth over the years. Compound interest is like this magical force where your money earns money. And then that money earns even more money. It's a snowball effect. The interest you earn gets reinvested, and over time this can lead to exponential growth. This is why starting early is so crucial. It's how those small, consistent investments turn into something really significant over time. Imagine looking back in 10, 20, or 30 years and seeing how your early investments have grown. It's not just about the money, it's about the financial freedom and security that comes with it. So, don't wait, start now, and let time and compound interest work their magic for you. Here's a mistake I see people making all the time. They think the economy and the stock market are the same thing. They see a headline about a recession and they freak out thinking their investments are doomed. But here's the deal. The stock market is forward-looking. It doesn't just reflect what's happening right now, it tries to predict what's going to happen in the future. So, even when the economy is going through a rough patch, the market might be going up because investors are optimistic about the future. Don't let short-term economic news scare you out of long-term investment strategies. Investing is a marathon, not a sprint. You're not going to get rich quick, and anyone who tells you otherwise is probably trying to sell you something. The real magic happens when you give your investments time to grow. Think about it this way. If you invest $100 today and it earns a 7% annual return, in 10 years, you'll have almost $200. But if you give it 30 years, that $100 could turn into over $700. That's the power of compound growth, and it's why patience is key in investing. Chapter 4. You ever heard the saying, don't put all your eggs in one basket? Well, that's like rule number 1 in investing. Diversification means spreading your money across different asset classes, like stocks, bonds, real estate, and even things like gold. The idea is that if one investment isn't doing so hot, the others can help cushion the blow. It's all about managing risk. You don't want your entire portfolio to hinge on the success of a single company or industry. Chapter 5. Look, I'm not saying you need to become a financial expert overnight, but you gotta understand what you're investing in. Don't just blindly follow the crowd or invest in something because some influencer told you to. Take the time to research companies, understand their business models, and look at their financials. The more you know about your investments, the better equipped you'll be to make informed decisions and ride out any market volatility. Chapter 6. Investing can be an emotional roller coaster. One minute the market's up, the next minute it's down, and it's easy to get caught up in the hype. But here's the thing. Emotional decisions are rarely good decisions when it comes to your money. When the market crashes and everyone's panicking, it's tempting to sell everything. But that's often the worst time to sell. Similarly, when the market's soaring, it's easy to get greedy and make impulsive decisions. The key is to stay disciplined, stick to your investment plan, and don't let your emotions get the best of you. Listen, I'm all for taking calculated risks, but there's a big difference between being calculated and being reckless. Don't get sucked into get-rich-quick schemes or invest in something you don't understand just because it promises high returns. Remember, risk and reward are usually correlated. The higher the potential reward, the higher the potential risk. It's always better to err on the side of caution, especially when it comes to your hard-earned money. Risk management is a crucial part of investing, but it's something that a lot of people overlook. Before you invest a single dollar, you need to understand your risk tolerance. How much risk are you comfortable taking on? This depends on a lot of factors like your age, your financial goals, and your time horizon. Once you know your risk tolerance, you can start building a portfolio that aligns with it. And remember, diversification is your best friend when it comes to managing risk. Taxes can take a big bite out of your investment returns if you're not careful. That's why it's so important to be tax efficient with your investments. One of the best ways to do this is to take advantage of tax-advantaged accounts, like 401(k)s and IRAs. These accounts allow your money to grow tax-deferred, which means you don't pay taxes on your earnings until you withdraw them in retirement. That can make a huge difference in the long run. One of the biggest mistakes investors make is trying to time the market, buying low and selling high. The problem is it's incredibly difficult to do this consistently. Instead of trying to outsmart the market, create a solid investment plan and stick to it. This doesn't mean you should never make adjustments to your portfolio. As your life circumstances change, your investment strategy should too. But avoid making impulsive decisions based on short-term market fluctuations. Remember, time is your ally in investing. So there you have it, the 10 golden rules of investing. These principles are designed to guide you through the often complex and sometimes intimidating world of investing. Whether you're just starting out or looking to refine your strategy, these rules can serve as a solid foundation. I know it's a lot to take in, but trust me, if you can master these principles, you'll be well on your way to building a solid financial future. It's important to remember that investing is a journey, not a sprint. It requires patience, diligence, and a willingness to learn from both successes and mistakes. Remember, investing isn't just for the wealthy or the experts. It's for anyone who's willing to learn, be patient, and stay disciplined. You don't need a fortune to start. Even small, consistent investments can grow significantly over time. The key is to start early and stay committed. It's for anyone who's willing to learn, be patient, and stay disciplined. The world of investing is accessible to everyone, regardless of your background or financial situation. With the right mindset and tools, you can navigate the markets and make informed decisions that align with your financial goals. So start now, stay informed, and don't be afraid to make investing a part of your financial journey. Educate yourself, seek advice when needed, and always keep an eye on your long-term objectives. The more you know, the better prepared you'll be to handle the ups and downs of the market. Now, if you found this video helpful, hit that like button and subscribe to the channel so you don't miss out on any future investing tips. We're committed to providing you with valuable insights and strategies to help you succeed in your financial endeavors. And as always, thanks for watching. Your support means the world to us, and we look forward to continuing this journey with you. Happy investing, happy